Hello, everyone. Welcome to Screw the Stock Market. Uh, this is the show where we talk about investing in alternative assets outside of the stock market. And today we're talking about another alternative asset class that we have never talked about before on this show. Aziz, what'd you think?
I loved it. I mean, like we got into the weeds of it and I enjoyed every moment of it. It's all about collectibles.
Collectibles.
Yeah.
It's cool, anything. I mean, maybe not anything, but it's very interesting. Things like baseball cards, ticket stubs. It can be things that are much smaller up to things that are millions and millions of dollars, like fine art or fancy cars
Yeah.
from the history or whatever. It's really cool. One of the things that's interesting about it is, I think, kind of like our recent episode on precious metals. I think the value is very much driven by the scarcity of it. So, unlike some of the other things that we talk about on the show where the value is driven by the utility of it, things like an apartment building, which people need to live in. No one needs, I guess people need watches, or people need cars, or people might not need baseball cards, but people are very passionate about these things. And our guest today was really awesome because he talked about that. And that seems to be a very central point in a lot of this, is that in these communities, in this world, they can kind of see through if your only interest in this asset class is
Money.
profit. They might not like you so much. You might not make friends. Um, but he talked about all sorts of different strategies and ways that you can build relationships and learn more about the values and what things are worth. And of course, his business is dedicated to helping protect, through insurance, the collectibles that people are buying.
And I
Go ahead.
think one of the things that the listeners will really uh profit from a little bit is he discusses ways of getting into some of these markets at a fractional basis if you can't afford, like an $18,000 watch or a brand new vintage Ferrari or whatever. So there are platforms where you can actually buy fractional shares of these things as well, at a much much cheaper value that's accessible to anybody.
Yeah, and of course, this relates to kind of one of these running themes that we've had, is the problem of very high buy-ins, right? So we've had products or asset classes where the buy-in might be 50,000, 100,000, $500,000 to buy an apartment building, or to participate in a partnership to buy some, I don't know, some very expensive high-end thing. In some of these, we might be able to get in for smaller amounts, right? He mentioned watches that are hundreds of dollars or thousands of dollars, but they're in the lower thousands, right? Maybe 2,000, 1,000. And that's
Well, he
much more
said some as low
attainable.
as $200.
Yeah. And so that's much more attainable to the average person. And you can still come to it with the appreciation of someone who really loves the watch, and with that objective of maybe making a profit from it eventually. So
Yeah.
now I think we've got two episodes in a row where we have some different types of asset classes that are a little bit lower buy-in, or at least it's possible to find some good opportunities that are lower buy-in numbers. So little by little, we're getting there. Um, Without further ado, guys, we hope you enjoy the episode, and we hope you get a lot of value from it. And thank you, as always, for tuning in. Hey there, thank you so much for tuning into the show. It means so much to me and Aziz that you are actually listening, that there's people really listening to the show. We're having fun with it, and we hope that you're getting a lot of value too. Education is just one of the first steps that anyone should take when they're on a journey towards financial freedom or personal development. And so it's great, you're doing the right things. I want to suggest a second step that you might want to consider if a lot of the things that we're talking about on the show are resonating with you. Consider visiting our website, legatoinvest.com/invest. And there's a button where you can click to gain access to our opportunities. And what will happen is you'll schedule a call with us. We'll talk, we'll get on a Zoom, and we'll get to know your investment experience. We'll get to know you. We'll learn about your objectives. And then if it's a good fit, we'll actually start to present you with real investment opportunities from time to time. And you'll be in the driver's seat where you can say, no, I don't like that one. And yes, I do like that one. And those real decisions, that means that you're actually in the game towards your financial freedom. So consider visiting legadoinvest.com/invest. Again, that's LEGADO invest.com/invest. Hi, everyone. Welcome to Screw the Stock Market. This is the show where we talk about investing outside of the stock market with the goal of taking control of our finances and our lives and our futures. And today we're talking to Rich Vinhais. Am I pronouncing that correctly, Rich? Vinhais. All right. We are really excited to have you on the show, Rich. We have been looking for this type of guest for a while, and so we're really excited and honored to have you with us. So Rich is going to talk to us a little bit about collecting, which is another alternative asset that we've talked about, but we've never really had anyone who's experienced on the show. So
it's a pretty popular one too nowadays. I mean, the returns are better than most things.
It's true.
So Rich, generally we'll start with just you telling us a little bit about yourself, where you came from, and how you got to where you are. Would you mind introducing yourself a little bit?
Of course. So, as you mentioned, my name is Rich Vinhais. I've been in my venture-backed startup for the past couple of years, and prior to that, I guess we'll take a step back in time. I worked in management consulting for about 15 years. I worked at a Big Four firm by the name of Ernst & Young. And prior to that, I was in financial services, working for a bank for about 5 years. And during my management consulting career, I led a small practice when it first started. It's maybe about 3 to 5 people, and I grew it to about 60 people. So it's like a healthy $35 million a year book of business. And it was geared towards the financial services. Like my background is in technology transformation. And it was basically to help large Fortune 500 companies get through whatever challenges they're dealing with, right? So the consultants come in either to help uncover, problems that they're kind of facing, and or corroborate the problems that think that they have, and then come up with a plan on how to get out of them. And I did that for many years, and it was great. I kind of ran my own practice. It was a bit of a business within a business, and so extraordinarily entrepreneurial. That's kind of been my wiring since Jump Street, where I have had a number of startups over the years. Like I had a startup when I was a senior in college, and then even when I got my first gig out of college working at said bank, I had another side business that I was kind of running through at the time while going through grad school. Everything you can kind of do early on in your career to just hustle and build up your resume and build up opportunities on the side. And as time evolved at working at the firm, and it was great. Like I won't throw any shade over there, but it's just like any other large corporate environment. After a while, you start wondering, are there other opportunities or are there other things that you could potentially be taking advantage of? And one of my early mentors before leaving the bank, I told him I was moving on to consulting. And he's like, "Look, man, I could create a new role for you, new experiences, but I can't create an entirely new world. And you need to keep exploring new worlds." And I feel like I've always took that with me, is like whenever I feel I've found the limits of the world I'm operating in, it sometimes makes sense to find a new one. So that's a bit of how I've evolved my career. And what ended up happening with moving into wax, I've always been a lifelong collector, and specifically, random stuff. Like you grow up collecting trading cards and comic books, but the thing that I was probably the most passionate about was collecting watches, of all things. Like, and I started when I was in grade school, then I got a little more serious in high school, and then maybe 10 years ago, it got to a level of maybe extreme when you start realizing how deep the rabbit hole goes, and just how many levels to this thing there are. And as I got into that space, it became very clear that it's a very expensive hobby, number one. And I was doing it mainly for just like drawn to the aesthetics, the mechanical engineering behind it. All that stuff has always intrigued me. But during that stretch of time, somewhere over the past, 3, 4 years, these things, these little mechanical marvels have suddenly skyrocketed in value and become their own cottage industry all by themselves and have kind of reached true alternative investment status. And that was never the reason behind why I got into it. That was just an incidental benefit. And that has certainly changed things a bit in how I personally collect, because in the past, it used to be, if it blows my hair back, if it ties to an experience, an achievement, or whatever, it's like I could justify it. But it used to be like you buying a car and then, losing value the second it leaves the lot. Now that's not the case. If you're able to get access to truly impressive pieces, more often than not, you're already up in value the day you buy it at retail. And that is something that never used to be a thing at all. So that's kind of a bit of my underlying illness or sickness in the collectible space, as it were. And, wax is one of those things where I come from, much like the two of you, you come from an immigrant upbringing, and that was me as well. Both of my parents were born in Portugal. I'm a first generation American. My upbringing has always been one of be very frugal with every dollar you make very pragmatic, investments, purchases, and it's typically invest in yourself and your education. My parents were very strong advocates for education, but ironically enough, because they didn't really speak the language when they moved over, they're like, you're going to have to work harder than the average student that you're in class with, because their parents can help you and we can't. And that always carried with me, where it was just kind of like, all right, you're at a bit of a disadvantage. It means you have to work harder. And that, I got to tell you guys, like coming up through my childhood, that placed a pretty serious chip on my shoulder of like, I got to work harder than the next guy because I don't have it as easy as that person. Whether that was
Sounds
right,
very
wrong,
familiar.
or illogical, that's what was in my head. And that's kind of carried forward. So I'll pause there for a second, because I've kind of hit you guys with a bit of the high level. I haven't quite gotten to how I transitioned into wax, but that's a little bit of my origin story.
It's interesting. I mean, all of that jives. I mean, you might as well be telling all of our stories, because I think all of our families are similar. And funny enough, we also have like a close Portuguese friend as well, who I have to say, she's got to be the most frugal person I know.
Yeah, she is. That's funny.
Yeah. Yeah.
We're cut from that cloth. What can I say?
Yeah.
What can I say?
No, I think a lot of that really resonates. The one thing that I think I haven't heard as much, and again, I think it's because of the nature of your, the collecting angle. A lot of the people we come, we have on the show talk about real estate or whatever it is, but they do it for money first, right? They're saying, "Hey,
Yeah.
I want to go into this venture because it's going to provide some return to me." And I think there's something really beautiful about getting into something because you love it, and then finding that if you do it in a certain way, you can actually make money from it too, which it's just this icing on the cake. That's how beautiful is that? I always talk about entrepreneurship, and I think that I tend to classify entrepreneurs into two categories. There's kind of the business person. I went to business school, someone who goes into it a little bit more indifferent about what the industry is, and they say, "Hey, I just want to find a profitable business that I can, play with the model and maximize." And then there's kind of the artisan businesses, where it's someone who is a plumber, and they're just a good plumber, and then little by little, out of necessity, they end up building a business, and they end up being business owners, but their intent was to be a really good plumber or a really good
Yeah.
whatever it might be.
Woodworker.
Yeah.
Or
Yeah.
Carpenter.
And so I think there's something really beautiful about that. But uh, and of course, obviously, yeah, like you said, that whole immigrant experience. That's one of the things that we are really excited to always just touch on because of that same kind of, whether it's true or not, that feeling of being at a disadvantage, that feeling of being maybe one or two steps behind is something that a lot of our audience can really resonate with. But at the same time, I think it gives us something else, right? Like this, it turns into an advantage eventually.
I
Uh,
I I think it certainly does, and it's just funny because it doesn't feel like an advantage in the moment, right? Because in the moment you're feeling like, God damn it, like why can't my parents help me with this or that? And don't get me wrong, the support was there, where they wanted me to succeed, and but they personally, like now I have a 7-year-old boy, and I go out of my way to spend time with him on his homework every night. Like it's just like I want to make sure he's getting the basics, the principles, and because it's partly your responsibility as a parent, but it's also like that's like my own baggage coming through, where I'm like, I got to make sure he's getting a little bit more than what I got. But what ended up happening is that superpower, that built-in angst to work a little bit harder, just it did end up becoming a bit of a competitive advantage, as you rightly stated, because and just like the collectibles thing being a passion that was purely opportunistic, mainly because I've been grinding for so long as I have, right? So when you're in the consulting world, I kind of look at it as in dog years, right? So you 15 years there, like multiply that by 7. That's what it really felt like, because the problems are so significant and the stakes are so high because your bill rates are so extraordinarily high that the margin for error is very low. But you learn very quickly the importance of trying to add value, find an angle, and get in where you fit in, right? So just because like I had, the areas of projects or the types of work, I come from like a very deep tech transformation oriented background and digital transformation and stuff like that. These are things ideally you'd want to do those types of projects all the time, but those aren't always there. So what are you going to do? Just sit on the bench, all of a sudden get exposed as somebody that's not able to generate revenue for the firm? Or are you going to develop a new muscle and find a way to continue to add value, be successful, and integrate and then expand within a client environment? So that's kind of always been a little bit of my wiring, is to find, get in where you fit in, but then you land, you expand, you create your own world, and find the angles that could be beneficial for not just the people you're helping, but for yourself. And if both people start benefiting from that value, that exchange, well, it's just like that's the ultimate, right? Where both parties are actually winning.
Yeah.
how beautiful. Yeah, absolutely. Uh, so, Rich, so tell us then a little bit more about Wax and kind of how you ended up there.
Yeah. So at Wax, and apologies, I just messed with the camera because it seems like I'm a little blurry. I don't know if you guys are seeing that as well. But Wax, so a few years ago, I was engaging with a buddy of mine, and he and I were, ironically enough, always in the same, as nerdy as it sounds, these watch collecting meetups, like literally at random events. I was always seeing him at the same event talking about a watch or a piece or a brand. And so we just knew each other socially through that community. And the community itself is it's a rather remarkable one, rather unique. And, we became friends. And as time went on, he kind of bounced an investment opportunity my way. And again, immigrant upbringing, very risk averse. And I turned it down. And it was one of those things where I was just like, wait, you're looking for a check for how much to invest in ticket stubs, and ticket stubs are, literally like major sporting events back in the day. You'd issue a ticket stub, you obtain entry. These days it's all digital, right? But back then, a ticket stub, let's just say a ticket stub to Michael Jordan's flu game, or the World Cup where Maradona scored the hand of God when he basically punched it in with his hand. Those ticket stubs have now become extraordinarily collectible and valuable because they were things that were actually at these memorable events, especially if significant things happen. And he was
You took
asking me to kind of invest in procuring these ticket stubs because the market had not yet figured out that this was going to be a valuable thing. So he was getting in quite early, and I turned it down. Okay. I'll get back to what ended up happening, but
you took me
simultaneously,
down you took me down a completely different path with that. I thought you were gonna go down like you were scalping tickets, and then somehow that transitioned into something collectible.
oh,
But but I would not have
not
even
quite,
thought about ticket stubs to major events are
not
collectible
quite
items.
that, not quite that nefarious. It
Yeah.
really is the scarcity of the stubs themselves. If they're corroborated to be the games where an athlete did a special thing, like Wilt Chamberlain scoring his 100 points in his game, those ticket stubs are really expensive now. Well, simultaneously around that time, I was meeting up with an old client who then ended up being a colleague that I ended up hiring. He worked for me, and then he decided to go off on his own and to do bigger and better things as an investor. I think he went into investment banking, and then he just went into creating his own fund. I think that's where he's at today. And he was telling me about this massive investment that he had made that was about to exit in a really significant way. And it was one of those stories where I'm sitting on the edge of my seat when he's kind of walking through the details on how he stood to make probably a clean $1 million off of the investment. And I was struck with like some serious FOMO. I was like, oh my God, I can't believe
This
like
is
you
all
got
off ticket stubs.
no, separate guy.
Oh,
So
separate guy. Okay.
the ticket stub guy positioned me with the opportunity. I shot it down. I just so happened to be meeting with an old friend, and he was telling me about another investment thing that he was about to make money on. And I was basically pontificating, man, I wish I knew, I would have invested. He's like, Rich, I asked you to invest in this company 4 years ago. And I was like, you did. You totally did. And I sat there like kicking myself, guys. I was just like, holy cow, how much did he ask me to invest? And then I did the math and I was like, oh man, I would have made an absolute killing. So, anyways, that was a bit of a little indicator that lit a fire under my ass where I was just like, oh. So I went back to my other friend with the random ticket stub idea. And I'm like, look, man, I don't know if this is going to work or what this is, but I'm in. I'll cut a check. This is a rather sizable check for ticket stubs, right? Because it's really to build up inventory to be held and then graded and then resold. That was really kind of the intention. And then immediately after writing that check, I experienced like this feeling of like, oh man, what have I done? This is this is not how I've ever kind of grown up. It's just like you don't take risks with it's got to be a sure thing. I've dabbled in the stock market over the years, but that's not something to bank on anything. It's just complete trash if you look at it in the grand scheme of things. At a minimum, you'll make nominal returns if you're active and lucky. So I then asked him for the data. I'm like, I want data on the assets that we're acquiring, what we're targeting, and 1,000 questions. And I did what consultants do, and I put together a very elaborate financial model that kind of calculated the break-even analysis, the high side probability, the auction cost, and then with the potential return. I put together basically, the Mona Lisa version of a spreadsheet that basically gave me this level of comfort that I'm all right here. I feel really good about this investment. And I got in very early. My friend was blown away by it. And he was like, you did this? You put together this entire analysis? And he was like, yeah, absolutely. And I'm like, and not only that, I want to be involved. So if we're buying stuff, I now know the stuff we should be targeting, the things we shouldn't be targeting. So then that led into months and months of me moonlighting with him, um, buying these ticket stubs in the evenings, and then little by little, more and more people were chipping in to get involved. And before I knew it, we raised about $500,000 of people throwing in cash that believed, obviously, primarily in my buddy, who comes from a line of investments that was all new to me. I had no idea. It turned out during that whole experience that he's a pretty big deal venture capitalist that has hundreds of companies under his portfolio. And as our relationship went along, he's like, Rich, you're born for this entrepreneurial stuff. I really want you to run one of these companies that I've been incubating called Wax. And that's how the whole pivot came about that way, where he then worked on trying to convince me to make my transition into a venture-backed startup, which I was just like, wait, I'm going to leave a comfy position where I'm a managing director, where I have a team of 60 people. I'm quite successful at it. I'm good at it. And I'm going to roll the dice on this startup where I'm going to make a lot less money. No, I'm not doing it. And I basically turned him down. I think I'll give you guys the abbreviated story. I shot him down like 2 or 3 times before eventually, evaluating, having the discussion with my wife and thinking about it. I'm like, again, immigrant mentality. I've been saving and I've made some very wise, sensitive, controlled investments over the years where we're in a position where we're in the home where we want to raise our child. Like, we're in the right school district where we have all the things that we need and we want. And I was like, if I'm ever going to take a chance, this has got to be the chance. I'm with somebody that's passionate, that's got the right backing. It's a space that I actually am interested in and care about. And that's how I made the transition in. I came in and, very quickly into it, I realized it was an extraordinarily different world, because like I come from a world where delegation is king, right? Because you're basically dealing with just executive level decisions. And here, being an executive, it's just like, yeah, an executive with like 5 people. And you now need to, set the vision, execute. And a lot of it is like, you got to get your own hands dirty. So it was an eye-opening experience early on, but it was also just chock full of excitement and energy, because it's just like, all right, like, here's a muscle I haven't used in a while, where it's like, I got to get my hands really dirty. And the business development side has always been a big part of my life and my role, but now it's just like, yeah, it was just a tremendous transition. And and the business itself, like, we focus on the collectible space, but at our heart, we are a collectibles insurance company. Like, that's kind of how we started, as a bit of an insurtech. We're founded by Slow Ventures, and the managing partner there is Kevin Collar, and he was like employee number 5 at Facebook, right? It's like cut from tech startup royalty. Um, and we have an incredible line of investors and supporters. And as we started looking into kind of like the potential of the company, you take a look at the size of the collectibles market. It's essentially a $450 billion total addressable market today, continuing to scale and grow. And by 2032, it's probably going to be closer to 600 plus billion, right? So the trajectory, the market size, it's one of those things where it's like, yeah, that makes sense to be, aligned with a space that is continuing to be on the upswing. And when people think of collectibles, historically, it's fine art, it's stamps, and like rare coins. That's kind of like the basics when you think of collectibles. But what's happened over these past couple years in particular, it's now collector cars, it's watches, whiskey, wine, sports memorabilia, ticket stubs, ironically enough, sneakers, comic books, and it's turned into a bit of a true alternative asset, primarily because people are now getting more and more disgruntled, especially a younger generation, where investing in the stock market, the level of trust, number one, is lacking because there's so many games that could be played there. And if you're not in the on the inside of how those games are being played, you could get burned very quickly. Right. Now, again, even if you're going blue chip stocks, you could do okay. But at the end of the day, you need to have balance in your portfolio and how you invest. So that's, the stock market is not a space where it's a portion of my investment portfolio, but it is a modest portion at that. Um, but in the collectibles space, it's now seen as like a legitimate alternative investment. So when you start seeing firms like Morgan Stanley issuing reports on the state of on the collectible market, or even the luxury watch market, they've been doing a rather robust quarterly report on how that industry is trending for the past couple of years. That's just a sign of a lot of institutional capital coming into the space, right? People are making money. The returns are sizable. There have been, just like any market, there have been corrections in the past 6 to 9 months, but it's still way ahead of a lot of other traditional markets. And that's why a lot of my friends and colleagues, it's a big part of how they invest. And quite frankly, it's a lot more fun, right? Because you're talking about wearing an asset such as a watch on your wrist that you could wear, enjoy, appreciate, and then still make 2 to 3 times what you paid on it. And it's just a different type of feeling when you're investing in something that you actually appreciate. So I'll shut up for a moment, guys. It was a bit of a rant, but please pull me back to
No,
wherever you want to take me.
no, it was really good. I mean, I got introduced to this topic actually. You were speaking earlier about how it's gotten mainstream. And that's how I actually got introduced to the whole concept of it being like a legitimate investment option. I started reading about it more on like Wall Street Journal, CNBC,
Mhm.
and whatnot. I mean, I remember one article in particular where they were talking about the return on collectible toys was demolishing the S&P 500's return for the past few years, which blew. I mean, Legos was like a hotter commodity than buying Google stock or Facebook or whatever. Not that
Yeah.
Facebook is doing too well right now, but
Doing a
but
little better, but yeah,
a
your
little
point
bit
is
better.
valid.
But yeah,
Yeah.
but just the fact that this was a whole untapped market that I never learned about previously, that was it was mind blowing. I mean, I used to have a coworker years ago when I was first starting my professional career. um, she used to say that she would buy high end purses as an investment, and I used
Mhm.
to kind of roll my eyes at her and be like, "Okay, yeah, right. That you're just trying to justify your shopping habit." She used to actually get upset because her husband was a contractor that would go to Afghanistan, and his Afghanistan money was her purse money. So he injured his leg and had to come back, and she was so pissed. And I was just like,
Oh, jeez.
just not even valuing the man just so you can shop. But then years later, I looked on the return of some of these purses, and she was not lying. It is an actual investment. I mean,
I
the
know.
returns are astronomical.
Yeah, it's and this is coming from a guy that bought my wife a Birkin for her birthday a couple years ago. And it sounds insane, but here's the thing with some of these collectible categories, and why we got into the business of protecting them, right? That's kind of a natural spring point for how the business evolved. With this much institutional money being thrown into it, with this much mainstream capital being introduced, because people are like, well, what is this? People are actually making money. These certainly they are still considered luxury items, but just like a Hermes Birkin, and this is reflective in just their business model. They will not sell you a bag if you just walk in and you're like, hey man, like I got 12 grand, 15 grand to buy this purse. They'll basically laugh in your face and say, number one, you have no buying history with me. Number two, if you want that bag, that's about a 2 to 3 year wait list, right? So, and that's how a lot of these watches are as well. A lot of these other collectibles where the supply is being masterfully constrained. And I think Hermes is like they're kind of masters of this. They've been doing it for so long. There's no flooding the market. They could generate additional revenue whenever they want, but that level of exclusivity, when you tell somebody they can't get something, what do you think happens naturally? It just makes you want it more. And
I
that's
heard
what's happening. That's just what's happening across the board, especially in markets like collector cars. That
yeah.
space has just gotten out of control with the growth that's taken place. But what's happened for us, like for Wax, and why we saw a market opportunity is that because these items have never been fully understood by insurance companies, people that try to get them insured or protected, insurance companies have not been able to process and understand. They're like, wait a minute, just show me the invoice of what you paid. And they're like, well, here's a receipt for 12,000, but I want it protected for 30. And they're like, no, why would we do that? That's crazy. But it's like, no, it is worth 30. So we came in explicitly to kind of fill that gap in the market where our app is designed for basic collection management. So somebody's looking to organize the collections that they have. You take a couple photos, answer a couple questions. It's nicely digitally organized in your app. And you could kind of get a sense of the value and how these collections are appreciating over time. And we are then prepared to insure them when they are ready, right? So it's free to kind of download the app and organize your stuff. But like, we're also an insurance company. We're also a tech company. So we're going to look, we are at the end of the day, we want to be at the center of a collector's journey. So we know collectors need to organize their stuff. We know they're going to need to protect their stuff. We know that in some instances, they want to physically vault their stuff. There's a whole nother story behind that. And then there's a variety of their services that we're looking to kind of bring online. But the insurance is kind of at the heart of our business because it's like, wait, people are literally being asked by their insurance providers. And one of our founders, his story was like, he had like a $2 million watch collection and he decided he wanted to protect it, contacted his homeowner's agent, and they basically laughed in his face and were like, we're not 2 million. You're going to have to get an appraisal for every watch, get back to us, and we may or may not cover maybe some of it. And the level of friction, I mean, think about it. Like, he lives in New York. He's like, so I have to take my $2 million collection uninsured several blocks down to a high risk area, get it appraised, hope I don't get jacked, then bring it back and hope that you guys are going to protect it. And then that's what kind of started Wax, where we're like, we need to be able to speak the same language. We need to be able to understand the secondary market values of these items. So when people are trying to get them protected, it's being protected the right way and correctly and accurately. Because there is a misconception with some homeowners policies where you add riders to your policy to add protection for jewelry or whatever. But if you don't read the fine print, in many instances, it's covering just what you paid, or it's only covering in certain instances. That's why it's always it's a rider, it's a bolt-on. But for us, it's a monoline policy where we've separated our policy from traditional homeowners. So you're kind of de-risking being commingled with your homeowner's policy, and you're getting a policy that's designed specifically for your collectible. And that's where we've had tremendous success. Like the amount of customers, the quality of clients that we have, we kind of focus on. It wasn't our focus. It's just kind of happened, right? Because our primary insurance carrier is Chubb. So we have one of the largest high net worth insurance carriers in the world that is our backer for the product that we've created geared towards monoline collectible policies. So we have a tendency to attract, we call them Henrys, like the high earners, not rich yet. So these are people that have a lot of disposable income. They are definitely on an upward trajectory. And in many instances, they do end up becoming high net worth individuals. And we've grown to kind of evolve with them because we offer that that white glove service. It's just like we speak the same language. Our head of underwriting used to work at AIG leading their collector car program for like 13 years. He did like $15 billion in collector cars. Like, we're accustomed to dealing with a fairly sophisticated clientele. And if you can't speak the same language as them and appreciating the investments they've made in these things that they care about, in some instances more than some of their own family, it's like, all right, then you lost them. Like, this is why our passion connects with these clients on a very visceral level.
That is so exciting on many different ways, in many different ways. I mean, first of all, just like as an entrepreneur, the lesson of understanding your customer's problem and solving it in a way that that is obviously beneficial for them, but like in a way that really connects with their values, right? That's something that I'm hearing you guys have done very well, and I can understand why that would be so exciting for someone. I mean, the way you explain that friction and the challenges of getting some of these things insured. I mean, with a watch, I can imagine. I'm not a watch collector, but my watches never last because they get scratched up, they get lost, they get beat up. So I can imagine how important it would be for someone who really cares about their watches, and then that frustration that they must feel when they come up against all these challenges and trying to get their watches insured. Now, one thing that occurs to me that's been a recurring theme on our show, you know, a lot of the different asset classes that we've talked about have pretty high buy-ins, right? We're talking like a $50,000 minimum for a real estate syndication. If you're going to invest in real estate, you need tens or hundreds of thousands of dollars to get into some of these things. But we've struggled a little bit to find asset classes that someone can invest in smaller amounts. And this might be a place where that could be a fit. I mean, I always often use the example, if I'm a realtor, which I am, and sometimes I'll sell a house and I'll get a $10,000, $15,000 bonus.
Yeah.
And that's not enough for me to go and do anything with in real estate. I can't go buy a house. I have to do that another few times before I have enough to go invest in a syndication or a fund. But maybe in collectibles, there might be some room for relatively smaller investments like that. I've had conversations with listeners who say, I can't even imagine getting to $50,000 in savings that I could just invest into something, but maybe 5,000, maybe 10,000 is doable. This is exciting.
Yeah, it is. And I'll be the first one to say, because I became a reluctant investor in watches. I don't consider myself an investor in watches. It just became that. But my intentions early on, because I've been doing it for so long, it was a bit fortuitous, right? Because when I buy, it is bought with intent and with a lot of passion and thought that went into it, right? So like when I've shared this story a number of times, but when I bought my son's watch to commemorate his birth, like it was an Audemars Piguet Royal Oak. And, he's 7 now. I bought it, 5 months before he was born. But I was so adamant that it was his watch. And I made it in my head that this watch represents the man of substance I think he will become one day with my guidance, right? So it's a reminder to me that you have a job. If he holds up his end of the bargain, this will be me giving it to him one day and saying, you earned this. You are what I always knew you could become, right? And that's how I buy my watches these days. Now, ironically enough, that watch, when I bought it, it was like 20% off and it still cost me over $18,000. And that watch at its peak during this recent cycle of madness got up close to 60,000, right? And so that gives you a sense of what the market could be. Now, I will say that the market, especially the watch market in particular, has gotten it got to a point where it got a little out of control. Kind of like I don't want to say that it's not even remotely close to the nonsense of the NFT market and everything that happened there. But that feeling of FOMO where people were just investing really heavily to get into it. So Rolex, which is an extraordinarily powerful brand, by no means is it a rare brand. Like they still produce like 1 million watches a year, right? And there's a finite number of them that I would say fall into a category of rare. So money could still be made buying watches at retail, which is hard to get. It's still hard to get because Rolex and some of these other brands do a wonderful job of kind of constraining access. And they will kind of make you buy other stuff in order to get access to the hot stuff that they are selling in these authorized dealers. So it's just like, oh, you want that amazing Daytona for 11,000 that I know is valued at 30,000 in the secondary market. I'm going to need you to buy this other watch for about 10,000, and then I'll get you on the list and you're likely to get that other Daytona. These are the games that have been played and have been
That's
played
gangster.
for a while. And
You just got
think
robbed.
about it. Think about it now. When there's people that are kind of now making this a part of their business, I know individuals, not companies, individuals that have been casually buying, selling, flipping for years, where they're pulling in $200,000, $300,000, $400,000 a year in profit, right? I knew one guy that his peak of the market was close to $1 million. He has a full-time job. And he was just doing it. And what ends up happening is the access you get, the relationships you build, you do start getting access and calls to get access to pieces. And if you have your finger on the pulse of the watches where there's a level of exclusivity, rarity, a little bit difficulty to get access to, there's always money to be made on those. If you are opportunistic enough and willing to put in the work to learn, just like anything else, right? But if you think just from one day to another, you're like, I'm going to be a watch dealer now, you're going to be in for a rude awakening, because there's guys that have been doing this for 20 years that they have a deal for you if you want to get into it, right? Because it's a dirty game. But I look at other opportunities to invest in this space. Like there's the CEO, and I'm buddies with this guy. His name's Nick King, and he runs Vint.co, and it's fractional ownership in like rare wines and spirits. And I use a platform all the time, right? Like where it's like, all right, cool. He's got a new bottle of, some rare Burgundy thing, and I don't feel like investing or storing or doing whatever that thing. I'll buy a few shares, get some fractional ownership of the bottles, and when they exit in 2-3 years, that's a nice way to dabble your feet into this space. And it's fantastic. And there's tons of fractional ownership sites out there that do this, like Masterworks, there's Rally Road. Now, granted, some of the fundamentals of those businesses are a bit of a challenge because you should be transacting on these things. So I don't know if these guys are making as much money as they thought they would initially. But for an investor, it's like, all right, I'll throw in a couple bucks if I could 2-3x, a small investment with very limited risk. Like those are the types of things I'm interested in doing. Similarly, like once you build up relationships with people that are deep into different collectible categories. So I think of another one of my buddies. He runs the Cultivated Collector. His name is Matthew Ivanhoe, and he runs one of the most amazing high-end collector car shops I've ever seen. Right, and it's in New Canaan, Connecticut. And he gets some of the most rare vehicles, and he travels all over the world. Like literally will travel. Like I think he was just in Germany last week. He was in Italy the month before, and he is buying cars and having them shipped back to Connecticut, cleaning them up, fixing them up, and getting prepped for show and sale. And these are the kind of things that you can't help but when you spend time with people like that and you start understanding which vehicles, how they're trending in auctions, those that are at value, it's still a difficult game and it's a different level of investment. So like you guys are talking about 50,000, like these cars, like you're like entry level is like 20 minutes into a conversation with him, he's trying to sell a Ferrari to me, like a 1990 something Ferrari. And he was like, it was like $250 million. It was like entry level. I'm not really a car guy. I appreciate it. Right. But like 20 minutes in, like I'm calling my wife. I'm like, I think I need to buy this fucking Ferrari. It makes no sense, but it feels like this should happen. Right. But it's just hilarious when you get connected with people that have those levels of passion and understanding of where
It's contagious.
markets could go. Not only is it contagious, the education that you could get could lead to you finding an opportunity where you could make a very hefty return. It's being educated, it's being patient, and then having the guts to make a move at the appropriate time, right? And I don't think it's any different in any type of investment strategy that you take. But there's risk, just like anything else. But the more connected you are to the true experts in these spaces, the more you start realizing there are levels to this thing. So you should start at those lower levels first before jumping up and playing with the big boys.
This is our junior co-host here.
I love it. Hi there.
She's adorable.
All right, what else do you guys got for me, or have I completely alienated your audience that was looking for more sound sage advice from somebody that's
Oh no.
a little bit more?
I'm digging this. I do have a question though. So
Please.
for someone who's, as you said, this is not for like the faint of heart to just jump right in. How do you get knowledgeable about this? How do you get into the pulse of what's hot? How do you learn more? You're more familiar with the watch market. So if I wanted to become a watch guy, how do I find out what watches I should be looking at? How do I keep myself educated on which ones I should be looking at? Because I see the watch stuff constantly on social media.
Mhm.
Like you said, it's blown up like crazy. Celebrities are really into it.
And I'll admit
Uh,
that every watch you've mentioned, I never heard of except for Rolex. I don't even know. I couldn't even.
All right, that's right,
Yeah.
Alex. We're gonna fix that for you. Don't worry.
All right, good stuff.
yeah. How do we do this?
Okay, so yeah, you have to understand that every collectible category has its own fan base, has its own community, and it has its own level of experience, right? So when you get into like, I'll keep it exclusive because we protect like over 33 different types of collectible categories, right? Like you name it, like we could cover it from the really common collector cars, ticket stubs to like obscure shotguns from the 1500s, like stuff like that. But like, it's imperative to find the community if you're looking to get educated. Now, I do think it's important that if you're going to enter into these spaces to do so for the right reasons. If you're looking to do it to just make a buck, chances are people will smell that on you. All right. So if they sense that you're there just lurking to make a dollar, these communities are so fiercely loyal and protective. They know if you speak from that same language. Right. So I could not pretend to go to a collector car event. And outside of the appreciation of just like I do love these things as mechanical, marvels, just like watches, they'll sniff you out. I think I went to an event last year where I was talking to a guy about a car and I was asking him clearly some pretty basic questions. And he just looked at me and goes, "Oh, you're not a collector car guy." And he walked away. And I was like, and all I could think of is I'm like, I probably deserve that. I guess it depends. Because I was asking more monetary oriented questions. So he sensed an ulterior motive, right? So I'm just throwing that disclaimer out there that if you're going to get into these spaces, doing so with the right reason, the right passions, usually will help you get further along, right? But watches, there are tons of watch blogs out there that, that are constantly publishing and talking about what's hot and what's not. Hodinkee is a very popular one. They've been around since the very beginning. They're actually staked by like LVMH. They are a legitimately large company that has some of the biggest investors you could think of. So for education, something like that. If you're looking to get a sense of like, one of our channel partners, Luxury Bazaar, Roman Sharf, he's kind of like this YouTube personality where he talks openly about his watch dealing business. And he goes through the ins and outs of how he makes a deal, the value of these watches, the cost structure, the margins he's making. And he's just openly talking about how it is to run a business in that space. And he's been doing it for like 30 years, right? So that's helpful to kind of engage with communities like that, where you could kind of be a voyeur and learn from the outside without engaging and potentially embarrassing yourself. Then there's like different platforms like Watch Recon or Chrono24. Chrono24 is like one of the biggest, where it's kind of like an eBay for watches, and it's only watches. And you see what people are listing watches for, and it's really a good sense of getting a sense of what secondary market prices are. So if you're looking to get a sense of like, all right, that Rolex sells for this much at retail, what is it selling in the secondary? You go to Chrono24, all of a sudden you get a nice comp of like, oh, wow, this is about 10, 15, 20% more than what you could get it at retail. So then you could see, is there a little bit of meat on the bone if you were to keep it in terms of potential profitability. And then there's sites like Get Bezel. I really like them. Get Bezel, they have a wonderful website and app that allows you to kind of get a sense of secondary market pricing, but it's no different. Like you find a special interest group. Now, the beauty about watches is like they have these things called meetups and watch communities. Like Red Bar is the number one largest watch community group in the world. I think they have like 130 plus chapters worldwide, a lot of them in major cities. And they basically meet up every few weeks at like a local bar. It's usually very confidential because you don't want people to know you're rolling in with expensive watches. There's like a private list that you got to get on. And then you meet up and you meet with like-minded people, and usually socioeconomic personalities and conditions are cast aside. This is like one of the few environments where I could be sat in a room talking about my $2,000 watch and how much I adore it and what it means to me, and have the same level of passion and connection with another guy that's wearing a $2 million watch. And he's talking about why his means to him. And he'll have that same level of like interest in my story as mine and his. And that is
beautiful,
extraordinary. And that's why I actually ended up writing a book on this whole community a few years ago, because I was so blown away by it. I'm like, this is wild. The stories I've had where I've had meetups with people all over the world, and they were treating me like family because we're interested in the same obscure technology that is a problem that's been solved for a long time ago. You don't need these things, but that doesn't matter. It's a very visceral thing. So I just gave you a couple of examples for watches, but it's no different for collector cars, where they have caffeine and carburetor events. They have tons of community events where people are getting together to just pull up and talk cars. And there's no difference for these other collectible categories.
How beautiful. That is exciting. And I think it resonates, right? It goes back to what you talked about, where you were purchasing something that you didn't really think of as an investment. You thought you purchased them because they mean something to you. And I think that's a really exciting point. That story about the socioeconomic status, that's really cool.
I'm not gonna lie, Rich. You make me want to be a watch guy right now. Just the
It's
level of passion that you're showing. I wish I had that. I want to be a watch guy. I don't know why, but you just make it seem like it's something that I should be.
Come on in. The water's fine and people treat you well. It doesn't matter if you're starting with a a $200 watch, or it doesn't matter. If you're doing it for the right reasons, it's a great community. I'm not going to lie. But over time, just like anything, when you start seeing more and more money get thrown into a thing, there's more people that are now in it for different reasons, like speculative reasons. Like I said, Morgan Stanley issuing reports on the returns for watches, like the top watches, and like, of course, that's going to attract different type of people. But I think by and large, it's a great group. It's a great community, and I engage with people in the community pretty much every day.
And just for like our listeners who are interested in any of these types of collectibles and just want to know if even what they're into is something that's hot nowadays, what are some of the top collectible items on the markets these days, besides watches?
Well, I'll do is I'll rattle off, because usually the big indicator are auction sales, right? When you start seeing certain auctions pop off at different levels, like I don't know if you guys heard recently, Michael Jordan's, I think it was his flu game sneakers.
Sneakers, I saw that.
It
Yeah,
went for about 2 million clean, right?
yeah.
And then back in September, his jersey from The Last Dance, like I think it was literally his last game, game worn jersey went for 10.1 million, right? Um, Prior to that, like trading cards, like trading cards have kind of had a bit of a correction. They went through a bit of a resurgence during the start of the pandemic, where there was a lot of nostalgia that was kind of refueling that space. But there was a Mickey Mantle, I think it was a 52 Mickey Mantle Topps card that sold for like 12.6 million. And this was just in August, right? This is not that long ago. Spirits are really going really heavy. This is why I'm a big fan of what my buddy's doing over at Vint, because it's like, all right, I could see there's a lot of money being invested into the wine and spirit space. Collector cars is absolutely on fire. It has been in recent years, but it's gotten so insane that the purists that used to go to these events, these car events, to drive their cars, are now no longer driving them because there's just too much risk, right? Where they spent, a half a million on a car that is now worth 10 million. It's just reached levels of return that it's madness. So whenever you check into like these famous auctions, those are really good indicators. Like I think it was in May, I'm looking at my notes here, May 22, a collector car. It was a Mercedes, a 55 Mercedes 300 SLR, went for 142 million. And now, granted, I think there was a little bit of like it was being purchased for a museum, so there's probably a premium built into that. And then in February, a ticket stub. It was Jackie Robinson's debut from 1947, and it went for 480,000. A ticket stub, and this is a category that virtually didn't exist a year ago. And all of a sudden, you got Wilt Chamberlain's cards trading for like, ticket stubs trading for like $75,000, $100,000. It's just wild. But when you keep your finger on the pulse of these auctions, like at Sotheby's, I'm a big fan of Sotheby's. I have a close buddy of mine works there. Um, Sotheby's is a fantastic place to get a sense of like how things are trending. And you start picking up, like the more you pay attention to those auctions, you start getting a sense of where the speculators are playing, and where they're not. Fine art continues to be hot. That's been hot for a very long time. Like that's not like that. I'd consider that like a mature space. Like the total addressable market in fine art is absurd, right? I think they're pulling in something like 65 billion a year, but the market of existing art on the market, it's like $2 trillion, right? Like that's just what's being transacted upon every year. People going to auctions, and it's like, all right, time to sell that Rothko, time to sell that Banksy, and they're making 2, 3, 4x depending on the pieces that are being put forth. So the money, it's no longer trivial amounts, right? These are these are such sizable numbers that it only makes sense that people are weaving this into their own investment portfolio strategies.
Now, are there any type of downsides to this? Are there like tax implications or anything like that that might negatively impact, collectors when they try to sell or transact in any of these products?
I mean, not really. I mean, outside of standard tax sales, right? Depending on where you are, that like that part is always going to be part of it. Now, what has happened and continues to happen, and actually Wax is contributing to a solution in this space as well. In decades, over the past few decades, fine art dealers would sell. Now, this tends to happen with like 10, $20 million pieces where the tax burden is sizable, and they're having them shipped to free ports, or they're having them shipped to, tax-free states and vaulted and just kept and because they don't want to deal with the tax implications of that, but they are still holding on to the investment. Um, this is part of the reason why Wax has got involved in the vaulting game as well. Like, we have a Delaware-based facility, but we're not focusing on fine art because we feel like that's a space that's pretty well under control. But we're looking at watches, sports memorabilia for similar reasons, and having people purchase and transport them to our Delaware facility and having them vaulted there. So it's they save a couple bucks on that, especially if the intention is to resell over time. And it's just offering a little bit more optionality when we talk to our clients, right? Because very often we'll have conversations with clients where they're like, "Hey, I have a $2 million collection in watches. I use about 1 million of it regularly. 1 million of it, it's just collecting dust." And it's like, well, why don't we take it off your hands and we just throw it in our vault? It's way cheaper than getting it insured, and you don't have to worry about the protecting it on your home premises. So it gives us a little bit more optionality to kind of engage with our clients. So we're not just pushing insurance, we're not just pushing vaulting. It's more about what the client actually needs and what they're dealing with.
Okay. And what are the insurance costs normally like for these things?
Well, so it's interesting because insurance is a heavily regulated market. It's not like we're just making up rates. Our partner Chubb, there's a thing such as is called admitted versus non-admitted paper. Admitted means these are filed rates by state. So every state basically has a rate card that is designated for the risk profile of the state that you live in, right? So of course, if you live in a higher risk state, let's just say you live in like Malibu or a location that has risk of wildfires, chances are your rates are going to be a lot higher than somebody that lives in Connecticut. So there is variability based on where you live. And then the size of collection usually, in the size and the type of collection varies wildly. So protecting a piece of jewelry or a watch, the rates they're significantly higher than protecting, ironically enough, artwork or sports memorabilia or trading cards where the rates are significantly lower. So the rates there's a wide range from, it goes by percentage, like it's percentage by dollar, right? It's like, 0.3% all the way up to like a few percentage points, depending on the type of collection. And then if the individual has a larger collection, because there are thresholds, right? So usually
Yeah.
the more stuff you're protecting, then we're able to offer credits and discounts if you have the right security in place, like a vault or a safe of some sort in your location.
You mentioned that jewelry has higher rates associated with it. Why is that?
It's just so think about it. Jewelry, watches are kind of constituted as kind of the same category, right? It's framed as jewelry, even though they're two very distinct animals. Those are very mobile things that people are always on the move with, right? So by virtue of that alone, I would think it's because there's higher probability of the item being lost
Ah,
in transit. Whereas
that
a
makes
piece of
sense.
artwork, you're usually not transporting your large framed whatever on the Metro North, right? Like so that's why art rates are usually quite modest. Similarly, collector cars, ironically enough, those are usually fairly competitive as well, because cars that are kind of deemed as collector car, and I'm not talking like a modern Lamborghini. I'm talking like, a car that's like 30, 40, 50 years old that only gets driven a couple thousand miles a year. Those rates generally could be very low as well, right? It all comes down at the end of the day when it comes to insurance, it's the risk profile that you're taking on, right? Like, at the end of the day, the carrier bears the risk in case of a loss, so it's priced accordingly, right? So those items that have a higher risk profile, yeah, it makes sense that they should probably be charged a little bit more.
Now, is there a minimum for the value of an item that can be insured?
Um, there's really not a minimum, but here's what I would say. Typically speaking, for individuals that have homeowners policies, sometimes they have like kind of like basic minimum, um, you know, valuable articles in their home that are like up to like $2,000 or $3,000, sometimes a little bit more. I think if your collection is sub $5,000, I think it's probably safe to just go with some sort of blanket within the confines of a homeowner's policy. If you are, and you don't have to be a collector, like if you are an enthusiast that's invested, 10, 15, 20, 25,000 into a thing, right? Like an item that you really care about, it probably makes sense for you to at least investigate and understand what the options are to protect it, fully protect it, especially as the value of the item starts going up over time. Because if you're also dealing with a coverage policy that doesn't care if it goes up in value, which that does exist, that doesn't exactly give you peace of mind over time. And that's
Yeah.
that's certainly the thing that we kind of cherish the most in what we offer our clients.
Okay. All right.
Well, Rich, this has been really exciting. It's been awesome.
Yeah.
I want to just invite you, if you have any way that our audience could continue to engage with you, or any kind of last message you'd like to send to them, um, this would be the time, please.
Well, I appreciate you guys being so hospitable, and I'm loving the immigrant background connection. I want to talk to you guys about that another time to hear more from your end. I think that's awesome. So thank you for having me and just being so kind. I could see the warmth in your eyes and your demeanor. Um, I think for us, we have you. You could reach out to us at wax.insure. We could also be found on Instagram at Wax Collect. And if you want to reach out to me, just hit me up on LinkedIn. Just search for Richard Vinhays. And I'm happy to connect and talk about anything that you might have on your mind that's germane to what we've talked about today.
Awesome. Awesome. Thank you, Rich. This has been very enlightening. I mean, I really, I'm not even just saying this, but I really did enjoy this conversation. This was really
Good.
eye opening.
Well, hopefully I didn't bore your guests, like your audience. Like you guys have done such a remarkable job building out such an educated audience. Like last thing I want to do is number one, bore them or alienate them. So hopefully they were able to get some value out of the discussion
That's okay.
today.
We were entertained.
Oh, okay, that's what matters.
No, I
Okay.
think this is right up our alley. This is
Yeah.
exactly the kind of conversation we want to be having, and so
Yeah,
we're just
exactly.
really happy that you were able to spend time with us today. Thanks
My
again.
pleasure. My pleasure, boys.